Hi, everyone. As it stands going into the stock market open on Monday, the 15th, everything so far looks okay, but that's just how it looks on the surface. As we can see here, since our sell off on Monday, Tuesday, the last 3 days, we've had some positive intraday action, but the one negative tilt to all of that is that the volume on the past three sessions has been well below average. Though one good news is that, well, that's what the kind of volume we get when we rally, right? Yeah, but normally it still increases. Back here in June, you can even see that while volume was below average, you could still see it was increasing as we would move higher. And even down here off the lows, you can see that the levels here were better than the levels earlier in April going into May. So we don't really have a market that looks like it wants to rally. If this day right here, the reversal on the 10th, would have had huge volume, I'd have been like, okay, yeah, maybe we are going to find a low here. But to me, it still looks like we want to at least pull back to the 50-day moving average until we break out below the lows here or the highs up here in July. It's best to remain very short-term neutral on this index or for any of the other indexes. As a matter of fact, Russell 2000 has pulled back the harshest and the quickest, and it's now at the uptrending 50-day moving average. So a bounce here would be well received. A crack below the 50 puts it right on the 200, and a crack below the 50 and 200 with the two lines kissing, that would be bearish on in a non-QE market. But since we still have QE, it might not be. But normally that would prototypically be a very bearish development if we fail here and crack the 50 200-day moving average. That if the volume would rise and leading stocks will continue to falter, that would definitely switch the model in the Russell 2000 to a sell, no doubt. The NASDAQ, if it switched, would just go to neutral. We're still in a buy mode in this one, and definitely in the New York Stock Exchange, S&P 500, and Dow Jones Industrial Average. But like I said, further selling will definitely throw us into a neutral condition because we are still overbought. Let me get up my oscillators here. You can see that we're going towards oversold conditions, and I know it's kind of hard to see. Let me get rid of BOP. Let's get rid of BOP. You can see that we're kind of drifting down and oversold. So is TSV. We're doing that on the NYSE also, but we're still not rounding back up, which indicates that there's still further to go. The NASDAQ, you can still see that's drifting down, not rounding back up. Russell 2000 kind of looks like it wants to free fall lower, and as you can see, nowhere near oversold levels. So we have quite a ways to go before we could really find a bottom. Now, getting back to, whoa, you don't need that one. There you go. That's the one that you guys need. All right, now getting back to any positions that we're going to take or not take. I have a 25% sell signal in IMO. It's closing below the 20-day moving average, not pictured here. It's the only oil stock closing below the 20-day moving average in heavier volume that we have not previously taken profits on. So that is a 25% sell. And PRTS has turned into a huge disappointment. Not really. It was a small position anyway, but still thought it could do better. At its height, we had a 15% gain in it. And now, knowing what I know about Max Green BOP stocks now and what I should have known after this day, after this breakout day right here, I said that you could do limit orders and get a limit order right at the pivot point area, which is around 385. I had no cash, so I made no trade. You got that, but the thing that should have alerted me that something's wrong is that PRTS following this breakout, it should have probably had more follow through. And even if it did pull back, it shouldn't have been on above average volume. And if it did pull back, it shouldn't have lost its max green BOP. So right here, I should have gone ahead and taken some partial profits, at least 25% with a 9% gain. And then that way I wouldn't feel so bad about it closing at 339, which is 1 penny below my final cut loss level. The open day, as you can see here, was 340, closing at 390. It's a goner. So that 15% gain turned into a negative 2% loss, but it happens. The one new long position I have tonight is a long position that I will remind everybody, unless you have a very large account, in my opinion, it starts to get bigger for new young guys around 50,000, for older guys around 100,000. This might not be a trade you want to take because it's only a 2.5% position. What would make it a 5%er? You have volume well above average. You have a high a day close instead of a close at 23.38. 23.64 is what we're looking at. And then also, besides that, what is the other thing that I'm looking for? Oh, we have a market in an uptrend. We have a market in an uptrend, not kind of drifting sideways. We have well above average volume, and we have a high day close. Then sure, 5%, 10% to 20% in a market that's actually rallying on huge volume. And if we had more green bop and not as much red bop, but those 10, 20% positions, let's forget about those for now. Those aren't going to probably be coming back anytime soon. And if they do, it's going to be one every 6 months. So let's not worry about that. So it's a 2.5% position. If we're wrong, we don't risk much. We're risking about 3 to 4 to 5% of the ultimate final cut loss level if we're wrong on a 2.5% position. That's not that bad. But AAOI, very strong fundamentals, earnings and sales growth, very nice technical pattern. I've psychoanalyzed the intraday price action from the May lows, and I like what I see. So despite the little bit of a weakish close on the day, it still is worth it for me. So 2.5% long position in this one. Passing on MPET, which is going to probably be the one that explodes higher. So if you're interested in taking on a little bit of beta, go ahead and look at MPET. This stock looks like it wants to explode higher, but the stock's a little choppy for me. It's up 6% in one day. It's only a $2 stock. It's not max green bop. It doesn't have max green bop in the entire base, and the way things are acting, I don't want to risk it. So that one I'll leave up to you. Also in ETF land, it looks like Chile wants to really do something. Very nice 4 days for this ETF coming off the June lows, especially back here. You can now see that it's retaking the 50 and 200-day moving average coiled on a pocket pinpoint signal, heavy volume, big surge in bop, and now there's a confirmation move. I don't have very good luck with these. I mean, just recently I would have thought about going along Malaysia. That one isn't working out. And then before that, there was the Australia move that I thought was actionable over here. So ECH will be a watcher, but that's definitely on the radar. ESC was also a potential. RNet was one of the strongest potential ones, but that base is just too short. Watch it fly higher. And then DRE was the other flag stock of the night. On the short side, WLDN is on short watch. Intraday, I would watch this one for a breakdown, and if there's shares to borrow, short this sucker off this reversal, because since this reversal didn't lead to a decline, you can now watch this reversal and see if it leads to a decline. Remember, we're looking for something like CXDC to happen. And then also DGLY is another current one, that big reversal. Man, that thing reversed so clearly at the end of the day, and I was gone. We were watching this one intraday, got a couple of breakdowns intraday, but it never led to further selling, cut our losses. By the time it did break down at the end of the day, I was not around. What are you going to do? Thank you.